Happy Wednesday. It's Fed Day, and the market started off strong. Then inflation showed up and said, not so fast. Mortgage rates jumped, refinance demand dropped, and now the Fed is stuck trying to figure out what to do next. Let's break it down. Hey there, it's Ashur with NEXA Lending, and today I'm coming to you from Pine Top, Arizona. Up here in the mountains, it's beautiful weather, there's a nice breeze. It actually feels like a nice, cool spring. But unfortunately, the housing market doesn't take snow days, vacation days, or mountain days. It keeps moving whether we like it or not. Today is a big day because the Federal Reserve is meeting, and while they're not expected to cut rates, what they say today can still move the market. Here's the problem that they're dealing with. On the one side, they got the job market that's weakening, the economy is slowing, but on the other side, inflation is still sticking around, and now rising oil prices are just making it worse. So the Fed is basically stuck between a rock and a hard place. They want to help the economy, but they don't want inflation to get out of control again. This morning, we got a key report called PPI, which is basically inflation at the wholesale level before it hits consumers. And it came in hotter than expected. Here's the simple version. Prices at the producer level jumped more than expected. That means that inflation could still be coming down the pipeline. So even though consumer inflation has looked better recently, this report tells us that we might not be out of the woods yet. And the market reacted immediately. We actually started the day looking pretty good. Mortgage bonds were improving, rates were stabilizing. Then that inflation report hit and it flipped everything. Mortgage bonds dropped, the 10-year treasury moved higher, and that puts pressure on mortgage rates. Now we're looking at rates that just climbed to around 6.3% last week, up from about 6.19% the week before. They've come down slightly this week, but we're still in a bit of tug of war. And here's where you really see how sensitive this market is. When rates jumped, refinance applications dropped 19% in a week. Conventional refinances dropped even more, about 27%. That's a big move. This just shows when rates go up even just a little, people pull back quickly. Now here's the good news. Home purchase activity is still holding up pretty well. Purchase applications rose slightly, and they're still 12% higher than they were this time last year. So buyers are still in the market. They're just being a little more cautious. They're watching rates closely, and they're being more selective. Now let's talk about builders because this is important. Builder confidence came in at 38, and anything below 50 means negative sentiment. So builders are still struggling. Well, why is that? Higher interest rates, rising material costs, labor shortages, and global uncertainty like the Iran conflict affecting oil prices. Because of that, nearly 2/3 of builders are offering incentives, about 37% of them are cutting prices, and average price cuts are around 6%. So if you're working with buyers, especially new construction, there are plenty of deals out there to be had. A big factor right now, though, is oil prices and global conflict. When oil prices go up, it pushes inflation higher, which makes the Fed more cautious, which keeps pressure on mortgage rates. There was some calming news today. Oil pulled back slightly after the US signaled support for stabilizing shipping routes, and that helped steady the bond market a bit. All eyes today, though, are on what the Fed says. Not just what they do, but what they are signaling. And then we've got new home sales coming out tomorrow and more economic data ahead that could keep moving rates. So here's the takeaway this week. Inflation is still lingering, the job market is weakening, mortgage rates are moving around again, refinance demand dropped pretty quickly, but buyers are still active and builders are getting more aggressive with pricing. This market isn't stopping, it's adjusting in real time. If you're a buyer, realtor, or an investor trying to navigate all of this, timing and strategy matter more than ever right now. If you want to run numbers, look at options, or figure out how to position yourself in your deals for this kind of market, please reach out. And if you found this helpful, make sure to follow along, like, subscribe, all of that good stuff. I break this down every week so you can stay ahead of what's happening. Enjoy the rest of your week, and if you're not in Pine Top, I promise I'll enjoy the weather for you. See you next week.